Okay, well, I think we're going to go ahead and get started. I'm going to keep my eyes on whether people are joining a couple minutes late, but it's so good to see you all. My name's Angie Pilgrim. I'm the Director of Community Impact for the St. Croix Valley Foundation. And just a huge thank you for taking the time to join us here today for the first of 4 CIS on the Screen presentations. This is a lunch and learn professional development opportunity, and today we'll be hearing from Tom Triplett on emerging funding streams. So a few things before we get started. As I mentioned, this is our first session, and though Tom and I have practiced a few times in planning, we just hope everything runs smoothly, but we also appreciate your, in advance, your forgiveness and your patience. We will ask you all to please mute yourself. Sometimes there's some background noise that our computers can pick up. So if you can do that, please. And then Tom does have a lot to review today. He's going to plow through a lot of information. So if you do have questions as we're going, go ahead and type them into the chat box. I'll make note of those. And then we will get back to you after the session. And Tom also includes his contact information on the last slide, so you can reach out to him that way as well. And then, as I mentioned, we are being recorded. So this will be available on our website after the event. So I just wanted to spend a minute or two giving a quick overview of the St. Croix Valley Foundation for those of you who may be new to us. We are a regional community foundation. We were founded back in 1995 to enhance the quality of life in the St. Croix Valley. We support 10 completely volunteer-run affiliate foundations in 6 counties throughout the St. Croix Valley, including Chisago and Washington counties and Minnesota, and then Burnett, Polk, St. Croix, and Pierce counties here in Wisconsin. And I know we have a few affiliate representatives on this Zoom call today, so thanks for your participation. So one of the things we do to enhance the quality of life is support our nonprofits through both grant dollars and professional development. And professional development is why we're here today. In 2017, we launched a program we call Consultants in Service. The idea of that program is to help small nonprofits in our service area by matching their needs with experts who volunteer their time. Those experts do everything from strategic planning to board development, and interested organizations can apply through a really straightforward, we think, application process. So another offshoot of that program is something we called CIS on the Road, where our consultants presented some of those popular topics to a group of gathered nonprofits. And I think some of you have attended those sessions. But because we are no longer meeting in person, we're delivering that program via Zoom on the screen today. But if you are interested in learning anything more about Consultants in Service in that program, you have my email address, so please feel free to reach out. So before I introduce Tom, and because we don't have time to go through one by one and meet all of you, I'm going to ask a couple quick polling questions, hopefully. So if you can, please respond. Okay, you should see the first one. What is your organization's primary area of focus? If you can please respond, I'll give you a few seconds here. Great, I see the responses coming in. Okay, we'll give it one more second. Great, okay, let me share those results. Does everyone see that? So a couple representative from arts and culture, some education, environment, a lot from health and human services, and then some other. Okay, one more question. What about, in which state do you do most of your work? Minnesota or Wisconsin? Great, a couple more seconds. It looks like the result, this was an easier one, huh? Results are coming in. Okay. Believe it or not, Tom, most of our attendees today work in Wisconsin. So, all right, thank you. All right, thanks for taking time to do that. So now I am pleased to introduce Tom Triplett. Tom is the current board chair of our affiliate, the Stillwater Area Community Foundation, and he's actually an original member of the consultants and service team. So back in 2017, he joined that effort. His working career includes 22 years in legal and executive positions in Minnesota state government, and he ended up as Commissioner of Finance for the state of Minnesota. He has been CEO of 5 Minnesota nonprofits and practiced law with 2 of the state's largest law firms. He's the founder of several Minnesota nonprofits, including 2 charter schools and the Center for Victims of Torture. Currently, he chairs the nonprofit program at Legal Corps and teaches nonprofit finance in the executive education program at the University of St. Thomas. He lives on the St. Croix River in Bayport, Minnesota, and this is my favorite part, wishes he had a dog. Tom, you can come borrow one of my 2 dogs anytime. So I am now really pleased to turn it over to Tom. Thank you.
And thank you, Angie, and everybody sitting in today, and particularly for that Consultants in Service program. Gary Kelsey, who's one of our later speakers in the series, was actually the founder of it. I think it's a really cool deal. Most of us semi-retired old folks, you know, have a way to keep contributing to the Valley. Okay, Angie, can you get rid of the poll on my screen here? I'm still showing the results. I'm hoping.
Did those results go away from everyone else? Huh, Tom, I wonder if you can just say stop share at the bottom there.
Stop share just for a minute or what?
Yep, you can. Everyone else, I think it stopped, but because you're the co-host, I think they're sticking around. So see if you can just click stop share. Oh,
There it goes.
Okay. So now, Tom, you're going to have to relaunch your PowerPoint via the share screen.
Okay.
Great.
Everybody see it okay? All right, now I have to be able to move the slides. Come on. There we go. Okay. As Angie mentioned, we have a lot to talk about. Here are the topics we're going to walk through relating to new revenue streams. Talk about a little bit about current fiscal realities, differing impacts on nonprofit types, and that's why I was happy to see that poll on which kind of nonprofits are represented here. Our focus on new and growing revenue streams, the skill sets needed to access these various streams, and alternative structures. We're going to talk a little bit about what's the future of the nonprofit organizational structure in our 2 states, and end up with sources of additional help. So the pandemic is probably the main reality we're faced with right now, but I want to say that this session is not about current pandemic remedies like the payroll protection program, for example. I mean, those are actually important, very important, but I've couched this presentation as to revenue streams available after the pandemic is over. So we're not going to be focusing on what's currently available. Those of you from Minnesota know that the Minnesota legislature yesterday adopted an extensive relief program. And it looks like the Congress finally is going to get its act together by the end of this week. So there will be some new pandemic-oriented remedies available out there. But the pandemic in general, obviously, is really hurting family budgets. Fortunately, as of yesterday, it looks like we are going to have a new federal administration, which is great. But on the other hand, the split leadership in state and federal government is here in all its force. Donations are growing during this time, which is great for nonprofits, but there's unequal impacts among the types of nonprofits and revenues. So now we're going to move into a conversation about the various types of revenue available now and coming, emerging trends. And so the first of the four kinds of revenues that we're going to talk about is the standard one, contributed income. Contributed income is and probably always will be the major source of funding for nonprofits, Minnesota, Wisconsin, and nationally. But the trends in giving in the contributed income category are changing. Right now, with the pandemic, foundation support for general operations, something we all shoot for. We want that unrestricted money. What's happening to that kind of contributions is still up in the air. Whereas foundation support for specific projects is growing rapidly, particularly with the pandemic and racial justice issues. And it's so encouraging, frankly, to see some of these very wealthy foundations dip into their capital and intend to spend more than 4% of their standard over the course of the year, focusing on these issues. Corporate contributions and sponsorships, not sure what's going to happen to those over the course here. United Way and other combined giving are suffering a drop off, and not just here locally, but nationally as well, as are fundraising events. Those of you who have events, I mean, those revenues have really dropped off since you can't literally hold those. Miscellaneous individual donations, a real bright spot on the funding scene here, are growing, particularly in respect to issues like race and social justice and healthcare and social services. Legacy giving, we're going to come back to that at the end of the discussion about contributed income, which is a really main untapped source, I think, that we're going to talk about later on. But it's important to understand when we talk about contributed income that the pie may be growing, but the number of potential recipients is also growing. And it's really important to understand that. I was amazed at the IRS number that says there are 450 new 501c3 organizations created every day in the country. I mean, that's phenomenal. I mean, over 400 every day, new ones. And they're all reaching out for some of the same sources of funding that have existed for a long time. So it's just important to understand that although the pie of giving is growing, the revenue is growing, the number of potential recipients for those contributions is growing even faster. Just showing the impacts of the pandemic quickly, more money is going, I think we all know, basic needs programs, usually health and human services, housing, food. Less money is going to arts and culture. I just saw a poll of 800 national nonprofits a couple of weeks ago and said that social services, health and human services revenues are growing 40% nationally over what they were before the pandemic. Arts and culture funding, unfortunately, is dropping by 60% among the 800 nonprofits surveyed. So what we're seeing is a distortion of the giving, hopefully just temporary, arising out of the current situations. Environment and education funding is generally staying about the same. So the COVID funding, things like the payroll protection program is fortunately staying, and the ability to get those loans converted to grants is underway as well. And as I just said, there's going to be more money coming, but temporarily from COVID related activities. So in the contributed income sector, we're also seeing a slight adjustment in who it is that's actually making the organizational contributions. A lot of the what I call intermediary funders are increasingly active. As Angie noted, St. Croix Valley Foundation with your COVID relief fund and the upcoming mental health fund. I mean, it's just extraordinary that a relatively modest sized foundation like St. Croix Valley is able to put together this really large COVID relief and the coming mental health funds. United Ways, particularly the United Way Washington County East that I'm working with, I think Jessica might be on the call here. They're helping in this intermediary funding, as are the community foundations and annual giving days. And I want to highlight the annual giving day funding because I think that is an underused funding stream right now. Minnesota, of course, has our Give to the Max Day in late November, and it's actually turned into a year-long kind of thing, so it's a big deal. December 1, we had Giving Tuesday, the big national fundraising effort. And coming up in April is St. Croix Valley's Give Big program. And I know you're starting to plan for that now, Angie, but the whole idea of combined giving days or giving weeks or giving months is really a growing, I think, a very high potential revenue stream. It may be that arts organizations or environmental organizations in the Valley want to have their own giving day. So keep in mind the idea of multi-organizational giving days as a way to generate new. In our case, Stillwater Area Foundation, we're an intermediary giver. We raise money and we give money back out. Our focus, basic needs. We have this great idea program. That's our hallmark activity every year. And we said, given the national and local situation crises, we're going to instead direct all that money into the St. Croix Valley Foundation COVID Relief Fund. So we put all of our great idea money into this. And social and racial justice, we've just set aside $15,000 to be distributed to organizations supporting this. So my point is that intermediary givers, like our community foundations, have the ability to do some fairly quick shifting to meet unexpected needs. And before leaving contributed income, I want to really emphasize legacy giving as a potential major funding source. You know, in the past, planned giving, legacy giving, gifts that take effect after death have really been a focus of major organizations like hospitals, universities, big theaters, big museums. They've had their own legacy giving program for generations and raised a ton of money. Every other week, I'm an alumnus of Grinnell College, you know, they send, Tom, have you updated your will lately? Come on, you guys, I do it once a year. Don't need to remind me every week. So legacy giving is one kind of giving that I think can grow dramatically in our sector. But the problem is it requires special efforts, special knowledge. Attorneys, there are attorneys that all they do is work on legacy giving. Accountants are very much involved in this. It can be simple things like a bequest or a more complicated one like the range of charitable trusts. And so what we're starting to look at is combined legacy giving programs. We have a conversation going on right now with the United Way and St. Croix Valley about, is there something where you can provide legacy giving support for a broad range of organizations that otherwise wouldn't have the heft or the knowledge in order to put something like that together. So file legacy giving in the back of your minds as a potential new funding source, and hopefully St. Croix Valley can get that going for us in the next few months or so. So that's category one, contributed income. I want to move to category two, which is public or governmental income. And I've been amazed at how many nonprofits do have governmental funding streams of some sort. In Minnesota, 75% of nonprofits receive some sort of government money, even if it's indirect. Excuse me. 55%, over half of Minnesota nonprofits rely on government money for most of their income. So government dollars, whether it's a direct appropriation from a governmental entity or a contract with the government, is huge. But much, if not most, of this government money is in jeopardy. So to look at the big financial situation, the huge budget shortfall at the federal level, you know, they've been spending money left and right on pandemic resolution and so forth, unemployment insurance, business relief packages. But the federal deficit for this coming year is going to approach $2.6 trillion. The feds are spending that much more than they're raising in taxes. And the accumulated federal debt as a result is up over $20 trillion now. So you hear all this talk about, well, we don't really have to worry about the debt amount with low interest rates and so forth. But once interest rates start to hike up, which they're projected to do over the next couple of years, the impact of this federal funding shortfall is really going to be intense. And it will impact federal pass-through dollars that come to the state for distribution. State government appropriations and contracts, local, city, and district budgets. So governments at all levels are really going to be affected by this outflow from the pandemic. And just a little bit about forecasts. Both Wisconsin through your Joint Legislative Commission and Minnesota through the Department of Administration and Budget, where I was commissioner years ago, release periodic forecasts. And it's kind of a bureaucratic kind of thing, but on the other hand, it's really critically important to understand the availability of government funding going forward and how these forecasts influence that. And there's huge swings in the forecast. You might have remembered that Minnesota was projecting a $2 billion surplus about 6 months ago for the current biennium. And then it went backwards down to a $1.2 billion deficit. And last week it went back up again to a $647 million surplus. But that's just for the first 6 months of this coming year. But if we look ahead in both states, Minnesota and Wisconsin, there's huge deficits projected. In Minnesota, it's likely to rise to $2.6 billion shortfall for the upcoming budget. So when the Minnesota and Wisconsin legislatures come back into session in January or February, they're going to be looking ahead to the year that starts July 1. And that's where these huge deficits will show up. Now, Minnesota, fortunately, has a state budget reserve first put in, which I'm really pleased about, when I was Commissioner of Finance. So we've got a cushion, but even with that cushion, we're going to see a huge drawdown or potential drawdown of that cushion. So my point is, even those states that have a budget reserve right now are projected to have a deficit greater than that budget reserve going forward. And what that means in the governmental sector is that there'll be more taxes and spending cuts in many areas, despite what the political parties say. You know, the Dems are going to have to look at spending cuts, and the Republicans will probably have to look at some sort of tax increases. So how those things play out will indicate how much of government revenue there will be. I think it's pretty clear that some categories of nonprofits will continue to do well from government funding, even with these shortfalls. So I think the selective gainers, if you will be providers of basic needs, particularly housing and food, mental health clinics. In Minneapolis, you might have been reading it, mental health clinics are having redirected funds from some of the police department appropriations. So we're going to see more and more of mental health, basic needs, housing and food. Those things I predict will continue to be strongly supported, even if in these times of government shortfalls. And we're likely to see refinancing of student debt and business debt. And yesterday, the Minnesota legislature put into place a large funding stream for businesses that are in trouble right now, which is good to see. I think on the federal level, we're going to see more climate and environmental protection. You know, the new administration is really concerned about those kinds of issues. So nature centers and anti-pollution efforts, I think, will fare pretty well. And my animal training groups hopefully supply my dogs sometime here down the road. I think they're also going to do well. So there will be selective gainers in this governmental funding stream. But there's going to be a lot of cuts in traditional funding. I'm scared to death about arts funding through the feds, which may wash down to the state arts board. Who knows? We're just going to have to keep an eye on that. Okay, let's move to the third of the fourth categories, where we're going to spend most of the time. This is earned income. It's the fastest revenue source growth in our entire field. The sale of goods or services. And it's regularly regarded as a really fundamental and strong component of a nonprofit's revenue stream. It appeals to other funders. Foundation funders love to see a strong earned income component with the groups they otherwise fund. Examples of earned income, and I've happened to have worked with clients over the years with all of these kinds. Operating a gift shop at a museum or a thrift shop if you're a social service agency. Leasing excess space in your building if you have it. Lease it out to an office, another nonprofit, whatever. I worked with the Detroit Police Athletic League, and they generated additional resources by selling athletic gear to participants in their sports programs. Another client of mine is their mission is to use horses in counseling services, PTSD, autistic kids. I mean, this group, Acres for Life, based in Forest Lake rather, is just an extraordinary provider of services. And they have extra stable space, so they farm out that stable space to horse owners. So they have the space, they know how to take care of horses. This sort of thing is not related to their mission, but it nonetheless still generates additional money. And selling accumulated knowledge. People who have been in a nonprofit field for a long time really know how to do it well. And many of them have the ability to sell that knowledge in consulting services to other nonprofits. Some of us aren't smart enough to do that. We just give it out for free through consultants and service, but you know, there are others who have figured out how to make this work. My mantra in all this, and I say this over and over when I teach at St. Thomas and elsewhere, is that every nonprofit should evaluate options for earned income. It shouldn't be optional. You should almost build it into your mission. Is there something we can do to raise money for our services in the way of selling a program or service?
Hey, Tom. Is this when I get to do a plug for my gift shop?
Oh, hello.
Hey, everybody.
Yeah,
Can you see?
here is a great resource on earned. It's written by a former Minnesotan. It goes through the business planning process, how to identify potential resources and how to convert those resources into an earned income stream. And another huge resource, let's see, get rid of that, in Minnesota is Propel Nonprofits, formerly the Nonprofits Assistance Fund. And those of you in Wisconsin, Propel has such a great education program. Get on their mailing list and tie into their financial training. It's not state specific, so they're happy to have folks from Wisconsin participate in their programs as well. So the relationship to mission, if you have earned income, is really important. It's always better to have earned income sources tied to your tax-exempt mission. And when it doesn't, you may be liable for what's called the federal unrelated business income tax. You literally are taxed on net profits that you receive that are not tied to your mission. But unfortunately, it's not easy to tell whether it's mission related or not. This is a bar located in the basement of a nonprofit senior citizen housing project. And I'm going to do a little exercise here. We're going to talk about 3 scenarios, and it's going to be up to you to say whether you think this is a mission-related activity for which there's no tax, or unrelated for which they have to pay a tax. All right, you ready? Scenario number 1 in this bar is that the nonprofit senior housing program provides a happy hour every afternoon in the basement of this housing project. They sell alcoholic beverages and other beverages, and there is a small net profit, okay, on the sale of alcoholic beverages in the basement of a senior citizen nursing home. So the question for you is that kind of activity related to the mission of a senior citizen nursing home or not? So I'm not going to give any clues away, except to say that this is an actual live IRS decision here. So this is a real life question. So looks like most everybody says it is mission related. You ready for the answer? You're right. It is mission related. The idea of socialization of people is part of the mission of senior citizen housing. So the IRS said, yep, you don't have to pay tax on that. That's mission related. But the second scenario is Joe and Mary, pictured here in the middle, met at this happy hour and decided to get married. And they had a wedding reception in there, and some of their friends from the senior housing came, but also the majority of people were family and friends from outside of the senior housing. So scenario 2 is the profit made from the sale of alcoholic beverages at this wedding reception. Is that part of mission related activity for this senior citizen? Looks like most people are saying no. And by the way, this is not a real live case, so there's no right or wrong answer on this. But what is interesting, when, a major difference here, when I teach this class, most people say scenario number 2 is mission related. It's part, you're trying to help residents of the building, improve their lives, get married, and so forth. So, but you guys say no, Okay. All right. Scenario number 3. The local Boys and Girls Club in the area of this senior housing project want to hold a fundraiser in this, in the basement here. Is their fundraiser, the profits from that sale, is that mission related or not? It's like people are changing their votes from yes to no. Like the Wisconsin presidential election, I guess. All right, well, in my judgment, this would probably be no, not because Boys and Girls Clubs are not good charities, but because that's not the mission of the senior citizen nursing home. So I just use these scenarios to say, oftentimes it is a little complicated as to whether or not it is mission related. But even if it's not mission related, you can still justify it if even after paying the taxes, it's a net revenue generator for you. And that leads to the next short presentation about, okay, how do I get rid of the scenario? Angie, can you help me? It's in the middle of my screen here.
Is it the poll results that have been
there
shared?
it
You
goes.
can, okay, good.
Yeah, there we go. So a social enterprise, you might have heard this term, selling a product or service that's related to your nonprofit mission and has a charitable component to it. And Minnesota and Wisconsin, although Wisconsin less so, is really a hotbed for social enterprise. All right. Angie and I were afraid that the polls were going to screw up our thing here. So there we go. Here are examples of well-known social enterprises in Minnesota. Love Your Melon. Have you heard of Love Your Melon? They make these knit hats for cancer patients, and then they extend it out to actually sell the knit hats, but the profits from those hats go back to support their mission with children cancer issues. Minnesota Diversified Industries, a fantastic organization. Former client, they were written up in the Star Tribune on Sunday, by the way, about expansion. MDI is a social enterprise, not because of the product they make. They package postage stamps and other things. But they're a social enterprise because of the people who work at the mission. In this case, developmentally disabled people. So Minnesota Diversified Industries main office in St. Paul, and they've just added a whole new manufacturing complex up in Grand Rapids. They make these plastic totes that the U.S. Postal Service uses, you know, to carry around, and you can buy them for your use too. But social enterprises, the most common type are those who have their workforce being special needs population. I worked with one over the years whose workforce screen printing operation were people coming out of correctional institutions. So it's not the t-shirts as such that is socially useful, it's the fact that there are provide jobs for people who otherwise would have trouble getting a job. Wilderness Inquiry started out as an environmental organization that brought physically disabled people into environmental settings, canoe trips in the Boundary Waters and so forth. Well, they've expanded now from their basic social mission and provide trips for non-disabled people into areas like the BWCA. So there's all, what I'm saying is there's all sorts of range of social enterprise. Cookie Cart, North Minneapolis. You know, there's nothing inherently valuable about cookies, but the workforce up there is kids who have trouble entering the labor force. Finnegan's Beer. Some might argue that there is social benefit to beer, but ordinarily not. But Finnegan's sends 100% of their after-tax profits to nonprofits. So that's another kind of social enterprise. Here's one that covers two areas. I don't know if you ever shopped at Small Things in Woodbury. It's owned by a former board member, by the way, of our Stillwater Area Foundation, Shannon Enright, an attorney who left the practice and has started this fair trade retail store. It's really cool. My partner, Vicky, is working there right now, today. And what they bring, Shannon brings into her store is products made abroad in third world countries, mostly. It's mittens, it's artwork. It's just extraordinary. So be sure you shop at Small Things because they cover two of the pieces of the social enterprise. The people who are supported, that is the artisans and seamstresses in third world countries, and the fact that Shannon is devoting 100% of her after-tax profits to local charities. So again, what we're finding is ways to earn money that can generate all sorts of subsidiary benefits to targeted populations or meeting special needs. Here are two sources of great information as well as some joint marketing activities, social enterprise organizations in the Twin Cities area. And when you get these references on the after we distribute all the information here, you'll have these websites, so you don't need to worry right now to write them up. But what's also interesting to me about social enterprise is how exciting the youth are finding this activity. So if you serve youth organizations, you might want to think, now, how could we develop a revenue generating activity that serves our mission and meets the needs of our area youth? And so what our foundation did 2 years ago, we ran a social enterprise camp for high school kids at Stillwater Area High School, and a couple from Matamidi came as well. And it's so encouraging to see young people seeing this not just as a temporary thing, but as a permanent career kind of activity so that they can generate money to support themselves, but also serve social purposes. But to make these kinds of social enterprise work, you need a skill set. Flexibility, entrepreneurship, creativity. And if you really get creative in thinking about things, you can come up with really cool ideas for a social enterprise. Have you ever heard of this one? Now Boarding. This was an Animal Humane Society chapter that was located right next to MSP, right next to the airport. And they were getting along fine, shelter for rescue dogs and cats and so forth. But somebody there had the great idea saying, we know how to take care of dogs and cats. How about if we expand into the taking care of dogs and cats that are not rescue, but that are owned by travelers? So they created and built this whole building. It's actually a spa for dogs and cats. So they come there. It's a for-profit subsidiary corporation. The cats and dogs just love that kind of spa treatment. So they'll pick you up, pick the animal up at the airport, or you can park there long-term at their parking lot, and they'll bring the dog or cat back to you at the gate when you return from your trip. So it's a really creative use of something you know how to do, taking care of animals, and then generating revenue for it. Now, the unfortunate part of now boarding is when the air travel fell off the table and with the pandemic, they had to temporarily close this. So that, well, it's not generating money now, but before they had to temporarily close it, they were earning so much money from the spa that and passed it up to the Animal Humane Society. So the Humane Society did not have to raise its own money in the way. And so that's a message that we often see in the social enterprise world these days, is that you create a separate entity. That entity, oftentimes for profit, will pay taxes, but the net proceeds remaining even after the paying taxes is sufficient to support a nonprofit mission. So there are issues with earned income. It's too often sold as net revenues. In other words, you've got to remember, obviously, what does it cost to raise those dollars when you provide the spa service for the dogs and cats? It can create cultural dysfunctions in your organization, and it requires special entrepreneurial spirit, energy, and expertise. And if you don't have that, oftentimes social service organizations really are not natural entrepreneurs. So we have to think about how can we get those kinds of skills? And there are ways, variety of tools such as joint ventures and so forth, where you can work with for-profits if you're careful in how to do it. And the oldest example I've found of a social enterprise type work of partnering with a nonprofit and a for-profit is this. Girl Scout cookies are 103 years old this year. Unbelievable. They started out in 2017. And this is a partnership between the nonprofit Girl Scouts and the for-profit bakeries that actually bake the cookies. Girl Scouts, by the way, did bake the cookies for the first 20 years of its organization, but they finally figured out, you know, we can make a heck of a lot more money if we have professional bakers bake them. And so it's a fascinating example of how you, even if you don't think, well, I have no entrepreneurial expertise, we're a social service agency, you know, we're not entrepreneurs, we're not business people. Well, one way to deal with it is to find a local company that you can partner with. And Girl Scouts, again, are the best example of that. So again, my mantra, every nonprofit that's represented on this call today should either have earned income already, ideally related to your mission, or you will consider it. And by the way, one other factor that's important here, you can have 100% of your income come from mission-related earned income. In other words, if it's related to your mission, you can have all of your revenue coming from earned income activities. But the IRS puts a limit on how much of non-mission related activity can be part of your earnings. And generally, it's thought to be in the neighborhood of 15 to 20%. In other words, if you get more than 15 or 20% of your revenue from non-mission related activity, your whole designation as a nonprofit may be in some jeopardy. So that's why creating affiliate corporations to really pursue aggressively and competitively these earned income activities is so important. All right, I'm going to move quickly now to the last category of new revenue streams called quasi-equity. And these are revenue streams that look a lot like for-profit revenue streams, shares of stock and that sort of thing. And they almost always require a new entity. here are some opportunities for equity-like income streams. And again, this is just make a note of these things if they ring a bell, and I'm happy to follow up with you. But tax credits. Without tax credits, we would not have a low-income housing market in the United States at all. There's something called new markets tax credits. Minnesota has an angel investing tax credit. If you invest in a socially responsible enterprise, you can get a state tax credit for that. Foundation investing through program-related investment, PRIs, and mission-related investments. And here's a website that focuses on that. This is where the foundation, with say $1 trillion worth of assets, says we're going to sell 100 million of our stock in for-profit corporations and instead invest that money into local social enterprises. So it's a really extraordinary way to see these sorts of things happening at the local level. Bremer Bank, that we'll talk about later, is one who actively engages in program-related investments and mission-related investments. So I'm happy to follow up with you after this if you're interested. Targeted bank investment. Banks are subject to the Community Reinvestment Act, which requires them to have a portion of their lending activity in low-income, high unemployment areas. And I'll come back to the bank issue later on, but this can be a really, really helpful one. Next time you talk to your banker, say, how are you doing on meeting your CRA requirements? And by the way, we have a way we can help you reach your CRA requirements by focusing your lending practices into our low income or high unemployment community. And we're seeing more and more of these kinds of things come to the fore in the for-profit investing world. Just interesting how Fidelity Investment has a multi-trillion-dollar ESG fund for investing in these kinds of social enterprise activities. And they're reaching down to this level, to the local level now. So it's a brand new revenue stream. And Minnesota, and Venn Foundation works in Wisconsin too, where charity and investing meet. They bring together entities that have a revenue raising idea with sources of capital. So Venn Foundation, check them out if you're interested in earned income activities. I want to close now, and we're just about running out of time, with some nonprofit trends just to be aware of. The overall goal of new business models is to provide the best of the for-profit and nonprofit world. And we see that in the Girl Scout cookies. We see it in entities like Now Boarding, where socially oriented nonprofits figure out a way to monetize some of their activity. And government now is making this easier through new hybrid business entities. Both Minnesota and Wisconsin have something called public benefit corporations. It used to be you were either a for-profit corporation or a nonprofit corporation. Now our two states have created a separate kind. It's a for-profit entity, but it has social purposes as their principal reason for being. So a really cool concept, and more not big corporations, but mid-sized corporations are converting into this public benefit corporation. And a variation of that is something called B Lab. And that's a certification program out of a California nonprofit. So a lot of things are changing in the nonprofit world. So just concluding with this general summary statement, this guides all my teaching and my working with individual nonprofits on new revenue ideas. We're adding more new revenue streams and more effective, diversified, and sustainable. But major uncertainties exist, especially rate government funding. But many of the new promising streams resemble for-profit businesses. And in fact, the distinction, legal and tax and so forth, between for-profits and nonprofits is narrowing in the United States. So these new hybrid business structures and relationships are really tending to change the whole nature of nonprofit enterprises. And by the way, we are far behind the European Union nonprofits in this. They're way ahead of us on this sort of thing. So how far this narrowing of the gap will go is still uncertain, but it's definitely a trend to watch. And in closing, here's a list of resources for all of the questions or issues that I've raised. Executive education programs at area universities, like the one that Gary and I teach at University of St. Thomas in nonprofit management, finance, and law. Hamlin has a great program. UW River Falls has an outstanding programs for a nonprofit management. And most of these are non-degree programs. So what Gary and I teach at St. Thomas is can be a week-long program, 6 to 8 hours a day for a week, and you get this certification in nonprofit management. And we find it's a real good resume feature to have. Legalcorps.org. Angie mentioned that I run the nonprofit program there. Legal Corps is a pro bono legal services group. We have 500 Minnesota lawyers who devote a significant amount of time to providing legal advice. During the George Floyd rebellion this summer, we provided assistance to dozens of the businesses that were firebombed or whatever to rebuild and come back to life. Now, Legal Corps, we don't work in Wisconsin heavily, but if you are organized in Minnesota, even if you work primarily in Wisconsin, you qualify for Legal Corps free legal assistance. Or if you most of your activity is here, even though you might be incorporated in Wisconsin, we could do your work. Now, that's not to say that every nonprofit qualifies. We have income standards, so we're not going to be providing free legal services to Mayo Clinic or University of St. Thomas. So it's the smaller up and coming nonprofits. Legalcorps.org. I mentioned Propel Nonprofits that provide services to nonprofits from both states. The Minnesota Council of Nonprofits has a great education program, and the Minnesota Council of Foundations too, and local social enterprise organizations that I showed on that one slide. And just the very last resource I want to highlight here is community banks. I just can't overstress the amount of help that a good community banker can help you, not just to get through the pandemic, but just to start to think about these new revenue ideas. And in my conversations with various of you, I've listed some of these banks that, in my judgment, fit that definition of a strong community-oriented bank. The people who will stay with you even during the pandemic tough times, but who will also help you then think of the other new approaches you can take. So these are just a handful of ones that my conversations with many of you have talked about, and I'm sure there's others as well. So as Angie mentioned, this is just the first of the CIS on the screen. Here's the dates and topics for the remaining one. Miriam Simmons, who preceded me as chair of the board of the Stillwater Foundation, is going to do her excellent presentation on effective board meetings. She knows Robert's Rules of Order backwards and forwards, and also has some great tips how to run good meetings. And Gary Kelsey is doing strategic planning on April 20th. and social media will be the focus on June 15th. So again, here's, here's my contact info, and the way we've arranged it with Angie and St. Croix Valley is that I'm happy to respond to any of the chat questions or any other questions that you've come up, and to help build links between you and other experts. And here's my contact info, and I promise to follow up in one way or another with every inquiry that comes out of this. So thank you very much. We're a couple minutes over, and I've enjoyed this. Hope it helps.
Yes, and I too just want to say thank you so much for joining us today. Thanks for all that you're doing to